only slightly late with this one. Only slightly, okay? Now don't judge me here. Today we're going to be talking about Walmart's smasher of an earnings report that they just posted. And before we do, I'm tempted. I'm tempted to tell you to look at the, a couple videos ago, the earnings report to watch video. Earnings reports to watch, where I gave you my estimation on what exactly the earnings results were going to look like for this company, because let me just tell you, we're eerily similar, okay? Eerily similar. Now, the stock was down today. Give it credit. Overall, with after hours down nearly 1%. The sneeze. Anyone else just die inside? I just died. Quarter. Okay, earnings smasher. Quarter two, non-GAAP EPS of $1.56 beats by 31 cents, and a GAAP EPS of $2.27 beats by 99 cents. I can't hear it all, by the way. I think I just blasted my hearing out with that holding in a sneeze that didn't hold in. That hurts. I have the world's biggest headache, is all I can tell you. But massive beat on an EPS standpoint. Massive beat. Massive beat. From a revenue perspective, if you recall, that's right. Guess what I said? I said you're going to see overall revenue jump 5%. Over 5% is what I said. And here they go and post a 5.6% increase year over year. And they beat by 3.93 million. So estimates were calling for a 3% gain. And they said, how about you suck on this? We're going to post a 5.6% gain. Very nice stuff. Walmart U.S. comp sales of 9.3% versus 5.4% consensus. Sam's Club comp sales of 13.3%. Very good numbers from them. Now, e-commerce is also massive because I told you expect barely in the triple digits on Walmart's e-commerce growth. Now, I was incorrect on this. They put up a 97%. Yeah, 97%. You know what that means? Pretty much I was correct. That's all I could tell you, right? That's all I could tell you. Average ticket was up 27% in the U.S., while transactions fell 14%, meaning less traffic in stores, but people are stocking up on more when they're buying, which is big for them. Sam's Club was 13.3 versus 6.2 consensus. International sales fell 6.8 during the quarter to 27.2 billion. So consolidated gross profit rate of 63 basis points year over year decline, primarily as a result of a shift in the mix of sales to higher margin general merchandise categories, fewer markdowns, and better margins on fuel, partially offset by carryover of investments in price from last year. That's right. We have a supposed justification for the decline of the stock today. So you'll see customers continue to consolidate store shopping trips with larger average baskets and shifted more towards e-commerce. Quarter two sales started strong, but in-store and online, particularly in general merchandise, helped by government stimulus spending, grocery sales had another great quarter. Or really, they say strong, I should say. Oh, drop something. Yeah, you did. That's right. You better pick it up, loser. So, as stimulus funds tapered off, sales started to normalize. That's what they're saying. But July's comp still grew more than 4%. Now, this wasn't unexpected, right? People have a big tendency to just spend money, right? If there's anything I know that people do, it's spend money. It's incredible the amount of money people spend, and they just don't care, right? So from that, we saw a little bit of a decline. We do have slides to cover with Walmart because they're nice enough to show me slides. And I love slides, okay? I love them. Overall, membership and other income fell 7.2%. Gross profit rate up 63 basis points. Operating income of 6.1 billion. Very nice to see that, which is up year over year. Good to see an up year over year after, in the middle of a pandemic where they are sanitizing like no one's business. Now, it is important to mention a big benefit, which I didn't even think about really, is the fact that these stores are shut down during the evening, or overnight, I should say. A vast majority of them, I should say. I don't know, I can't speak for necessarily all of them, but a vast majority are shut down, as of even like 9 p.m., So guess what? That's less payroll spent. That's less on electricity. They do have to keep the power on, obviously, but usually they go to 2/3 lighting. But overall, less payroll. It's a massive difference, and they don't make many sales during that time, so it's usually just not profitable. So not too bad. They give a little idea of balance sheet, which isn't that important. 3.1 below. Dividends, and 1.5 was in the second quarter so far. But year to date, these are the numbers. As you like it, share repurchases. They didn't purchase any shares. That one got me. They didn't purchase any shares in this quarter. But overall shareholder return of 1.5 billion. Naturally, due to the result of what was I even talking about? Naturally, due to the result of the dividend. Boom. So, overall gross profit rate, you saw an increase. Operating expense rate increased, and operating income increased. Good deals. Grocery saw a mid-single-digit growth. Health and wellness saw a low single-digit, and general merchandise was in the mid-teens, which is massive, by the way. General merchandise spending was up big. And obviously they benefited from other stores not being open. There was a big push for home improvement this year as well, so Walmart just saw all this sorts of benefit. And that's what we're talking about. Overall, Walmart International, you saw a decline in net sales. Operating income fell. Nothing really exciting with Walmart International. What can I say? Walmex saw a 5.7% growth. China saw a 10.4% growth in net sales. Canada saw a 13.9%, and the UK saw a 5.3% decrease. Can you believe it? I can believe it, I guess. From a Sam's Club perspective, net sales rose 8.8%. Membership income rose 7.8%. E-commerce from the Sam's Club side grew 39%. You do like to see that. And gross profit rate rose quite a bit. Now, without fuel, you'll see comp sales rose 13.3%. You do love to see it. That's all I could tell you. Net sales rose 13.5%. Just good stuff. Fresh freezer cooler saw a low 20% increase. Holy crap. And that is with low in stocks because everyone's having trouble keeping in fresh freezer cooler type items right now. Grocery and beverage saw a high teens growth. Consumables, high teens. Home and apparel saw a low double digit. That's incredible. Mostly because of outdoor, though. Technology, office entertainment, TEO, saw a mid-single digit. And health and wellness saw a high single digit. Overall, give me over here. All right. Overall, get rid of this nonsense. We don't look at this stuff. I think that's it for the slides. Yeah, it is. So the last thing I look at which you know I look at, is the balance sheet for this company, and we zoom in. We zoom in on this place. We zoom in this house. That's how we do. They're so nice. They give me a 6 months comparison and a full year comparison. From a 6 months perspective, we love to see it. Total current assets, you see, as of now, it's $65 billion. That is a increase from 61.8 billion. Total assets in general, though, not much movement. 270 or 237 billion. I've never been more tired in my life. Versus 236 billion of a year ago, or 6 months ago, and 234 of a year ago. Total liabilities, current liabilities rose obviously with that increase in cash. So did liabilities. They raised some debt, but for the most part, it was just this fun stuff. But dividends payable obviously took a damper on that too. But 82 billion in current total assets, nothing too massive there. Total stockholder equity, though, which we love to see, is at 81 billion for the stock. 81.1 billion versus 81.5 billion 6 months ago, and 77 a year ago. So there's very good stuff going on here. This balance sheet's well stacked. The company's in a beautiful position. The dividend's gonna stay the same. Valuation on Walmart, you know what? People are going to say it's a little concerning. A company like Walmart should be trading around the 15 to 18 PE range, and it's trading in the 25 range. Is that crazy? I don't think it's that crazy. So this is a company really benefiting from everything going on right now, and I think they deserve the higher valuation because of it. So I'm not going to complain. Obviously, as my largest position is Walmart, I'll just take it. And this stock's going to recover, obviously. People are just selling for no reason, seemingly. So they're selling because of the projected potential slowdown. But again, the company's going to have a record year. So let's just sit back and watch. So have a good one.